It's not a good market out there right now, but you're watching Newsroom on ET now. Both the Nifty and the Bank Nifty are trading at day's low, deep gashes. In fact, in the last half hour of trade, the selling seemed to have worsened. Hitesh Zaveri is joining us from Axis PMS today to discuss market and all that is happening in the market. First of all, Hitesh, afternoon. I'd like to understand from you what exactly is leading to this correction. Is it the valuations, which are still not in very attractive zone, fear of earnings cuts, estimates of scaling back, or is it the geopolitical landscape which seemed to have got disturbed a bit once again in the last 24 hours, higher rates for longer possibilities? What exactly, or a combination of all that?
Hello, Jay. Good afternoon. Good to connect with you again here. I actually think last two reasons are the bigger factors right now. One is, of course, the geopolitics. Wars, unfortunately, have always very uncertain outcomes. And the reality that the war is on, the reality that the superpowers are involved, very unfortunate development there is, the NPT, being discontinued, Russia pulling out of it, and that's a serious and major negative development, and all of us should worry about it. So that is a big concern. In fact, that's substantial concern, and the way I see it, even in the developed market, the decline that we saw yesterday, especially in the US, I would attribute a lot of that to the negative development in the geopolitics part. Also, the fact that the higher interest rates are going to be there for a while, and that would worry the market because we are so used to have cheap money, and therefore healthy and rich valuations for a while now, that all of us are taking a while to get used to the new reality.
You must have observed the outlook of Walmart and Home Depot, especially after the results which were posted last evening. Both of them are consumer stocks and companies and have a direct bearing on what the demand perhaps is on the American citizen side. Somehow there was a very kind of a direct correlation with the kind of commentary a lot of consumer brands here in India, be it Kajaria, be it Asian Paints, Pidilite, a lot of innerwear companies, all of them have given in their con calls after the result. Is the slowdown, in your view, now seeping into the consumption side, not only locally but globally?
That's a very good question, actually. But the reality is that the US consumers operate in a very different dynamic as versus the Indian consumers would. And then now that in India, let's talk about what is maybe affecting the Indian consumers. And the number one concern on people's mind, excuse me, is inflation. And then we kind of saw the effect of it in the last quarter, and even likes of as you bring out, even the page industries, for example, had a negative volume growth, and then of course many other sectors of the consumer space. So that till the time the inflation issue is there, we are going to be watchful. Having said that, India seems to be in much better position versus many other countries. I mean, when you look at IMF FY24 and FY25 forecast, we are still north of 6% in each of the 2 years, which is the impressive number. Especially when you compare us with the rest of the Asia reality, and of course much better versus US and that in Europe. I do think, by the way, there is also a lot of dispersion in very different reasons. Dispersion in the sense, for example, when you talk to hotel industry or travel industry, that's doing really well. And MICE and all these travel expenses and people on the recreation, that spend is really high. When it comes to names that you mentioned in the consumer discretionary, I suspect there is slowdown on. There's more of an issue of competition as versus the slowdown. In fact, in paint industry there are a lot more many players now than before, and so on. It is more discretionary. It's a sector specific event rather than overall consumer sector.
Hitesh, which are the parts of the market, because I was just looking at the composition in the last 1 year, large part of the market is down, say, 40–50% from the recent highs. Index is not. So index in a way is masking what is happening in the market. Which are the parts of the market where earnings quality continue to be very robust, and in the coming years it will only get better. Areas where you would like to, or you would urge investors to research towards, which should be bought into in this correction.
Well, they're interesting. These are interesting times, and what happens is that many of the industries become more attractive, and to my mind, that those if I were to name three or four, banking will be on top of my list, simply because we had very good performances in the quarter ending December. The commentary has been very positive. This is a week of a number of conferences are taking place, and banks are reiterating that the outlook for the coming year is very positive. So banking is one, and the banking industry, bank Nifty has corrected and providing an opportunity for the medium and long-term investors. NBFC, the similar story again, and for both banks and NBFCs, the NPA cycles have been favorable. They have been kind of trending down, and there is a stock correction to offer. In addition to these two, I would also look at automotive and auto ancillary. Both these industries have been kind of coming off for a long period of 4 to 5 years of weak growth. For the last 1 year, we have already been seeing positive numbers here, and the outlook for next couple of years seems to be rather positive.
What are your thoughts on the point that the March quarter could actually see peak earnings for banks? Would you reshuffle your area in financials or move towards NBFCs now? Are they looking better versus banks?
I think banking story will continue. It's not. I mean, it's difficult to call out peak of something. Meaning that post that they are going to decline. There are two factors here. One is or three, four moving parts, if you will. One is on the net interest margin side. The second is on the growth of the loan book itself. And of course the NPA cycle. So on all the three, I mean, there is an argument that the NPAs will not expand any further, and they may correct a bit. But I think we do have a growth factor to rely on, and the credit cost and the NPAs have been favorable. So as well as banks have done in the last couple of years, especially in last 1 year, we think there is still more momentum, and I would quite much focus on the banking industry.
All right, Tesh, we'll let you go on that one. Thanks so much for joining us on the show today.